For most people, buying a home is the single biggest expense of their lifetime, but with the skyrocketing costs associated with homeownership, reaching that milestone is increasingly difficult. Many people simply won't be able to buy a home at all. The ones that do will find it hard to pay the mortgage, taxes, maintenance, and all related expenses. Luckily, certain home buying tips can make this purchase much more attainable for the average person and make owning a home enjoyable. By following these guidelines, you'll be able to buy the home you desire without being house poor or having no money left for other bills or expenses. These steps will ensure you're comfortably able to afford all costs of owning a home, so an unexpected expense won't throw you into foreclosure. My name is Chris, and I help teach people about money, personal finance, and investing. If you're interested in improving your financial future, make sure to subscribe to the channel and hit the like button if this video is helpful. Decide what you can afford. How much money every month can you comfortably spend on housing? One popular rule of thumb is to spend no more than 30% of your gross income on all associated housing expenses. A common misconception is that you can take what you were previously paying for rent and apply that same amount for a mortgage payment. However, there are many more expenses related to homeownership. A mortgage payment is just a fraction of the total cost of owning a home. Who's going to pay to fix the heating system if that breaks? What if your roof needs to be replaced? You're going to need to do routine painting, repairs, and exterior maintenance. What about replacing the flooring when that becomes worn? All a renter has to think about is rent and utilities, while a homeowner needs to pay the mortgage, taxes, insurance, utilities, maintenance, and unexpected expenses. When looking at a particular property to buy, consider how much the utilities are going to run. Also, consider what you'll need to pay for routine maintenance and what you'll need to save for large capital expenditures, like a roof or appliance replacement. As a rule of thumb, budget 1 to 4% of your home's value for maintenance. If the home is worth $400,000, this would equate to $4,000 to $16,000 per year, depending on the property's age and other factors. Fix up your credit. First-time homebuyers might have very little credit, making it difficult to qualify for a mortgage and negotiate a competitive rate. Before getting serious about purchasing a home, it's worth your efforts to optimize your credit score so you can receive the best financing terms possible. Improving credit doesn't need to be expensive. One way to do this is by simply opening a credit card and making your regular purchases and paying the balance off right away before any interest accrues. Furthermore, always pay other debts like student loans on time and never miss a payment. Reducing your debts will also make it easier to qualify for a mortgage. Lenders look at your total earnings and your total monthly obligations to determine how much they're willing to lend. When your debt-to-income ratio is low, it makes you a more attractive borrower because it means you have plenty of income to service your loans. Optimizing your credit can take a long time, sometimes months or even years, so it's important to take steps to improve it long before you plan on becoming a homeowner. Know needs versus wants. How do you make sure you're buying the right home? Between the home itself, the location, and your budget, there are a lot of variables to consider, and it can be quite a balancing act. To make it even more difficult, home buying is an emotional process, often making it hard to think clearly. Create a list of needs and wants. Needs are simply the things you need in order to make the purchase worth it. Maybe you need 3 bedrooms, and you might as well not buy at all if you can't have them. Perhaps you need a yard, and if that's not attainable, it's better to stay where you are. Wants are optional, meaning it would be great to have these things, but it's not a deal breaker. Maybe you want to be within half an hour to downtown, but if it's not within the budget, you'd settle for a 40-minute drive. Making this list early on will help you determine if a property that fits your wants and needs even exists in your price range. It will also be helpful to refer to the list as you get caught up in the emotional process. Have a sizable down payment. Real estate is a high barrier to entry investment, meaning it often requires a large amount of money to buy a house. It certainly won't be easy to make the jump into homeownership with a few $1,000s sitting in your checking account. There are homebuyer programs available that only require a small down payment, but putting at least 20% down on a home is a great idea for many reasons, the first of which being that it will greatly reduce your monthly payment. For example, when buying a $500,000 home with a 5% interest rate, the mortgage would be roughly $700 less if you were to put 20% down than if you were to put 5% down. The borrowed amount is clearly much less with a larger down payment, but putting 20% down also means you won't have to pay mortgage insurance, which is required by a lender when you have less than a 20% down payment. This larger equity portion will also mean you're much less likely to owe more on the home than it's worth in the event its value drops. Prepare to pay closing costs. Adding to the cash needed for a home purchase, there are other expenses to consider, such as closing costs. Understanding what closing costs will cover and budgeting for them will smooth out the home buying process. Average closing costs run 2 to 5% of the purchase price. On a $500,000 house, this would be anywhere between $10,000 and $25,000 on top of the down payment. These are various fees and expenses for your lender for originating the loan: appraisals, inspections, legal fees, a few months of insurance, taxes, and HOAs if you have them. It's sometimes possible to finance the closing costs and roll them into the mortgage, but this will cause your payment to rise and it will mean they follow you around for years to come. Have a buffer. Just because you can make a certain housing payment one month doesn't mean you'll be able to make it the next month. Are you guaranteed to earn the same amount of money each month, or does your pay vary? This might be the case if you're paid commissions, receive overtime pay, if you're self-employed, own your own business, or in the service industry and rely on tipped income. Could you easily replace your job if you were to be let go? These are things to consider before deciding on how much you can comfortably afford. It's not wise to configure your housing cost based on your highest earning month. It's also a smart idea to have a larger emergency fund once you become a homeowner. When you're a renter and you can no longer pay your rent, you might be forced to move in with friends and family with little money lost. If you can no longer pay your mortgage as a homeowner, the bank will foreclose on the property, causing you major financial loss. Know what things cost. Buying a fixer-upper or a home that needs a little TLC can be an excellent opportunity to build some equity and greatly increase the value of your home. You need to realize that renovating a home can be much more difficult and less glamorous than professionals make it seem. Let's say you buy a house that's in desperate need of a new kitchen. Are you prepared to pay $25,000 to $40,000 for a kitchen remodel? Because that's the average cost according to Angie's List. Plan on another $6,000 to $15,000 for each bathroom and over $12 per square foot for new flooring. Will these improvements even provide you the ability to build equity? Put another way, if the home costs $400,000 and needs $50,000 worth of improvements, there's a chance the new value might only be $450,000, or what you've spent on it. Being in charge of these renovations can be exciting, but if you're not prepared for the myriad of inconveniences and problems that come with this task, then it could turn your dream of homeownership into a complete nightmare. Look for income potential. Perhaps the best way to make the leap into homeownership is by house hacking. This involves buying a property that produces rental income that can cover your housing expenses, allowing you to live there for free or at a greatly reduced cost. This is commonly a duplex where you live in one unit and rent out the other, but there are endless options. You could rent out extra rooms in a single-family house, rent out a finished basement, rent out extra land, storage space, or an accessory dwelling unit. People will often balk at this idea as if they're above this method. They don't want to share their property. Besides, this won't work in their area. Is it ideal? It depends on how you look at it, but having your housing expenses paid for is an excellent benefit and is much more desirable than being house poor. When you purchase a home, you want to make sure you're getting a property that will be the right fit. You don't want to end up regretting this purchase or finding out that you bought a complete dump that isn't even what you wanted and the process has been a total disaster, leaving you house poor. While many people regret purchasing their first home, you can follow these guidelines that will drastically increase the likelihood of buying a home that fits your needs and your budget.